80% of the millionaires are from real estate, and 100% of the billionaires are from private equity. Why can they make so much money with private equity? What is the formula and perhaps the secret? So let's get started. Private equity, it's a game of leverage and multiple. You need to understand how to value a private company. I'm going to give you a crash course on private equity right now. And the formula to value a company is EBITDA times 15 equals the company value. And EBITDA is just a fancy word for saying adjusted net income or adjusted profit. And during the phase where people are doing the research on a private company, they'll find all these adjustments to basically find the core earnings of the company. Now 15 is the multiple. Depending on the industry, this can actually range somewhere between 7 to 15 for private companies and also 15 to 25 for public companies. So I'm using 15 as an average. Now there are two ways for the company to grow and increase its value. I'm going to use an example of a company making 1 million a year and the multiple is 15. So the company is actually worth 15 million in the private equity world. First of all, they can make money by growing the company. So what if the company goes through some optimization and they are able to make 2 million a year? Now the company is worth 2 million times 15 equals 30 million. That's double. And value is created. Now the second approach is growth in the sector. What if a company is in a hot sector like AI? Previously, the multiple might only be 15, but because now everyone wants to invest in AI, it becomes 17. So 2 million times 17 equals 34 million. So there's an extra 4 million of value created because the multiple increased. And this can be based on negotiation. This can be based on recent benchmarks like recent companies sold. So that is majority of how the value is created. You can see how fast the valuation of the company increased because the net income or the EBITDA is increasing. Another way private equity can make money, which is using leverage. It's really the cherry on top. As long as the company grows in net income, then the value of the company will increase by 10x to 15x based on the multiple. To put this into math, basically for every $1 million increase in net income is worth $15 million in sales price. So right here. Now, private equity uses a lot of leverage. For example, it's 80% leverage and 20% equity, which is actually the investor's money. The fund managers will have some stake in the fund as well, but a lot of that will be coming from pension funds and whatnot. For example, they buy a company that's worth $15 million. They might only use $3 million and borrow $12 million from the bank. Now the company gets sold at $30 million and they net 15 million before interest and got the 3 million back as well. That is actually a return of 500%. Let's use some better numbers that is more realistic in the private equity space. For example, they buy a company that is worth 500 million and they might only use 100 million down and borrow 400 million from the bank. And the company gets sold at $1 billion. They net 500 million before interest and get their 100 million capital back as well. The return is 500%. Back when I was working in private equity, one of the deals I worked in was actually the company was invested at around 300 million. And around 5 years later, it sold at $1 billion. So the return is actually very high when you consider the growth in the company, the growth in the sector, and also leverage as well. That's why 90% of the millionaires come from real estate, but 100% of the billionaires come from private equity. So what do you think? Let me know down in the comments below.